What's up guys, welcome back to my YouTube channel. It's Amos. In this video I'm going to show you guys all the trades you could have caught today on Monday, September 29th, 2025. So today there was multiple opportunities. Unfortunately I got squeezed on my first one and ended up stopping trading for the day, but there's a lot of opportunities to go through today and some stuff that I missed out on. So going on into the day here, we saw the first setup being formed at 10:15 ish, because we can see that we formed a 15-minute bullish for value gap here and we couldn't close above the previous candle's high. What does that mean? If we're creating a bullish 15-minute for value gap, it means that price displays so aggressively to the upside that there was not a fair transaction between buyers and sellers here. Knowing this, it means that there is a low volume area here that needs to get rebalanced through in order to find fair value. Okay, this is a fair value gap, and when it's unfilled, basically it means that it's a magnet and you need to target that level right here because it's the fuel of the market. This is what will drive the market to the upside, or even grab the liquidity to have enough fuel to go to the downside. All right, knowing this, I always want to play the candle that closed and created the fair value gap. So here you guys can see this is the first, second, third candle. The third candle cannot accept price above the previous candle's high, so the second candle, that tells me that there's exactly at this area responsive sellers that stepped in, and we're most likely going to be ready to find shorts back down towards this unfilled gap. Now I'm going to scale down to a 1-minute chart and try to find reasons on why I should enter back down towards this unfilled gap. This is my target. As soon as a gap gets created and I find signs of weakness at the highs, I want to trade back towards the lows and the unfilled 15-minute gap. So right here I have a change in the state of delivery. Okay, what is a change in the state of delivery? It's basically when you have a high, low, higher high, and then right here if there is a wick, okay, when you close below that wick, it creates what we call a breaker block. Okay, breaker block. But when you don't close below that wick, but you close below the opening price of the series of up close candles that created the sweep, it is what we call a change in the state of delivery, which is basically the confirmation that price is willing to go to the downside without closing below this wick, which would be the breaker. Okay, it's like an early entry showing aggression from the sellers. All right, knowing this, this could have been the first entry, but here in this case it was not that clean. So here really the best play would have been to wait for the new candle to open, shoot down, create an order block plus that breaker, so you have two confirmations, then you short back down towards the most recent low and the unfilled gap. So right here you guys see this 15-minute candle just closed. Okay, it will close in 1 second, and then a brand new candle will open, shoots up, drives down. As soon as you see a candle closure right below this low here, you will have your order block. So right here, as soon as you see this candle closing below this low here, you have an order block, a breaker block, and a bearish for value gap towards an unfilled gap, which is an extremely good draw on liquidity and a really good magnet in price. So here was the best possible entry to go short from. Stop loss right here, right above this candle's high, take profit right there. Okay, unfortunately at this time I decided to wait a little bit more and didn't get picked up, but looking back at it, this was definitely the best play here to take on that unfilled 15-minute gap right here. Okay, so first play was this. Then right after sweeping this low here, you guys will be able to see it pretty well. Right here, as soon as we have fair value gaps being created, you guys already know that the model 1, okay, there's two models basically I'm always looking at. The model 2, okay, which is what I just showed you guys, is to play the shorts back down towards the unfilled gap. But the model 1 is to wait for the gap to get filled and then play the squeeze here back to the upside if there is a 1, 2, 3, or 5-minute bearish gap being created. Okay, so knowing this, we shorted at first. Then once we are in this gap, you want to look for signs of aggression from those buyers and signs of weakness from those sellers, okay, to see if there's a potential scalp to get taken inside this level. Okay, we're always looking at gaps to find scalps. So right here, when we tapped the 15-minute gap, we created basically a 1-minute bearish for value gap. So I can say to myself, all right, if we're truly bearish, we are going to respect this 1 minute gap in order to create new lows. Okay, the principle behind the model 1 and basically the intraday volatility scalp model, which is 15-minute fair value gap tap and 1 minute, 2 or 3 minute inversion fair value gap back to the upside. Right here, you are entering a level where on the higher time frame, buyers are the one controlling the market. 15-minute gaps are telling you who's controlling the trend. And right here, it's a 15-minute bullish fair value gap that got created. So the trend is bullish. Then if you're creating a bearish gap in an area where higher time frame buyers are most likely going to step in, there is blood in the market. Okay, there is lower time frame sellers that try to push price down and higher time frame buyers that want to push price up. So now, since you have an area where sellers want to push price down and buyers want to push price up, you have blood in the market. So those kind of trades are really good because one of those participants is going to get squeezed. So here you would want to wait for price to close above this bearish fair value gap to long back towards the most recent high for 1-to-1 risk to reward. And right here, why was it a good trade? In my opinion, it was a trade worth taking because it was first a perfect sweep. Okay, so we swept sell side liquidity to the tick and we couldn't close a singular handle below the low. Okay, that was telling me that there was a lot of passive buyers right here that were absorbing those sellers. Then we had the V signature. So the V signature is when the fourth candle after the fair value gap creation creates an inversion. So right here, you guys will be able to see it pretty well. Let me come back here. So this is the first candle, right here the second, right here the third. And as soon as this third candle closes, we can mark out our fair value gap being right here, which is areas of aggressive selling. Then if we're truly bearish, we should hold this gap in order to create new lows. But look at what's going to happen. V signature, the fourth candle disrespects the gap. So this is the area where you should go long. Stop loss right below this candle's low. Take profit at the most recent high or for a 1-to-1 risk to reward. Okay, right here, unfortunately, this was the trade that I was willing to take. Did not get filled, unfortunately, but I had my limit order right here and I decided to take the continuation play based on this breaker. Ended up getting squeezed here, as you guys can see. Unfortunately, this market has been pretty rough. There was two good opportunities, but then started to chop like absolute crazy and didn't give us any good opportunities right after. Okay. Just to show you guys, basically, because I just did the Tradeify backtesting session, you can do that on any time frames, guys. Okay, let's see here on the 1 hour chart, the same thing. We created a 1 hour bullish fair value gap. Okay, and this candle is failing to accept price above the previous candle's high, which is 24955.5. So if we're failing to accept price above here, it means that responsive sellers stepped in and the drawn liquidity, the most recent drawn liquidity would be this internal fair value gap, this internal bullish fair value gap. So then you would want to scale down to a 3-minute or 5-minute chart since you're looking at a 1 hour chart, okay, for your framework. And then right here, look at what we have on the 3-minute chart. We have a order block here and we have a 3-minute fair value gap. So just looking at this structure right here, this low has a lot of chances of being hit. Why? Because this is the low of the H1 fair value gap, and right here this structure would be considered high probability structure, high probability fair value gap and high probability order block to create new lows. So right here would be a pretty good short for a 1-to-1 risk to reward, respecting a higher time frame framework and respecting basically your unfilled gap scenario. Okay, right here, really good trade looking at a 1 hour chart. Okay, then we're going to keep going on the day so you guys will be able to see more opportunities. Right here was an opportunity where you would have gotten squeezed. Absolutely, I judge that being a really good loss. You see, we swept sell side, we're closing back and failing to accept price below the previous candle's low. Good, and we have an unfilled gap right above us. What does that mean? It means that price has a lot of chances of going back towards this unfilled 15-minute. Then I scaled down to a 1-minute chart, and I would consider that right here, that order block being high probability, especially the bodies right here. Okay, so right here, the best possible entry would have been the bodies of that order block. Stop loss right here, take profit at a 1-to-1 risk to reward back to the unfilled 15. Look at what happened. We pulled down, started to hold a little bit, and then went to our stop loss. Unfortunate, but this was, in my opinion, a really good trade that in the long run, looking at this framework and this structure, it is a good trade, okay, a valid trade for that strategy. Okay, so then let me just show you guys another trade you could have caught right here. Okay, so we're creating a 15-minute bearish gap after sweeping sell side liquidity right here, as you guys can see. And then right here, you are failing to accept price below the previous candle's low. So you would be looking for longs as soon as the new candle opens up to shoot back up towards this drawn liquidity, which is the unfilled 15-minute gap. So right here, scaling down to a 1-minute chart, what do we have here? Do we have an inversion? We have an inversion here on this 2-minute chart. So let's wait here because price is going to the downside, rejecting those highs. We would basically look for signs of confirmations of price holding right here and breaking to the upside. So then we would enter longs back to the upside. Okay, so now let's wait for signs of aggression from those buyers. Right here, it would be your sign of aggression from those buyers. So at this displacement candle, you would be looking for longs either on the pullback or market to scalp this internal unfilled 15-minute gap. Okay, so right here, price pushes up, and this was the play for a 1-to-1 risk to reward. Stop loss right below this candle's low. Take profit right here for a 1-to-1 back to the unfilled 15-minute bearish value gap. All right. Okay, so this was the other play that you could have caught. Then let me just show you guys the last play you could have caught today. No, there was even 2 more plays you could have caught. So right here, there was a good play. On the hourly, we tapped this hourly fair value gap. And then as soon as we tap this hourly fair value gap, you can see on this 15-minute chart, we created a bullish fair value gap here on this 15-minute. We failed to accept price above the previous candle's high. We have an unfilled gap right below us. This becomes the drawn liquidity. Then I scaled down to a 1, 2, 3-minute chart to see if there's any reasons on why I should enter shorts. Right here, let me just see. We created that 2-minute inversion for value gap, 2-minute breaker block. So right here would be a really good area to short from. Stop loss right above this candle's high. Take profit at this low right here for a 1-to-1 risk to reward. Okay. So we wait. Right here you sell. And as you guys can see, in few minutes we hit our target. So literally in 5 minutes we hit our target. Okay. Reasoning behind the trade: tapped the 1-hour gap. Failure swing here, couldn't close above the previous candle's high. We failed to accept price above this second candle that created the fair value gap. Then we had an unfilled gap right below us. We found structure that was leaning more bearish. Stop loss, take profit, right timing, good trade. Okay, then the last trade you could have caught was right here. Same exact process, same exact steps behind the trade. You swept sell side, failed to accept price below this 15-minute low. Okay, really good. Then you have an unfilled gap right above you. What does that mean? It means that this structure right here has a shit ton of chances of holding to create new highs. Then what is this? Is the structure good enough for me to enter right here, right now? Let me just look at this 5-minute chart. Okay, not anything on this 5-minute chart, but on this 1-minute chart, I can see we have a breaker block. We have a fair value gap right here. We also have this order block right here. 3 PD arrays that have been created, plus this unfilled gap right above me. I trust the fact that we are most likely going to create a new high. Also, we created that inversion for value gap that we just pulled back to, that we could find potential supports from in order to create a new high. Really good trade in my opinion right here. Pretty late in the PM session, but right here, really good trade. Okay, we created even a breaker for a re-entry, and then right here in a few minutes you would hit your target for a 1-to-1 risk to reward. Okay, so the trade would have been just like this. Okay, really good trade. So overall, these were the best trades of the day. Multiple opportunities. Was able to find one good scalp on my 550k Lightning accounts with Tradeify. Unfortunately, lost with the VIP. So appreciate you guys so much for showing love and being there on my YouTube channel, and showing me a lot of support. If you want to support me, also use code AMAS for the highest discounts on Tradeify. This is what funds all my giveaways, and this is what lets me do all those videos, those recap videos, and also my live session with you guys. Appreciate you guys so much, and I see you guys on the next one. Peace out.